You click this because you're done with the pain of chart confusion and missing the exact 1 minute entry the professionals take. Today, I'm giving you the market structure framework that instantly plots every single level you need, making complex structure feel like a single button press. Now, let's stop talking theory and get straight into the live chart proof. I'm going to show you a 1 minute entry on the EURUSD, how we use market structure alignment to pinpoint that entry. Now we're going to start on the daily time frame. You're going to see exactly how the companion tool runs this structure for you, and we can instantly find this entry, and then we'll go through step by step, walking through the structures to show you exactly why I took this trade. By the way, for those of you who follow my structure method, we've built something new that's going to make your charting a whole lot easier. I'll show you more about it later in this video. So let's first go through here. Now we're making a potential low, which is an internal low in the market. We are bullish here on this structure to the upside. There's a reason why I'm expecting price to continue down to this low. Now, I'm not going to go into that in too much details, but it's understanding our imbalance. Let's go forward with price. We're looking for a break. So we get a nice break through this internal structure, and we just wick through this strong daily low. So at the moment, we're still bullish on a swing structure. What we're going to do is we're going to mark off this as our area of internal supply on a daily. So let's mark this off as a daily supply. And what we're looking for is price to pull back to this supply to continue to the downside. So again, let's go forward with a few candles. So we've just wicked up into that area of daily supply. So we now have our breaker structure, our current week low on an internal structure where we're expecting price to now run for that internal low. So now what we do, we go down to our next time frame of choice, which is the 4-hour time frame. Again, straight away, we're looking to see the market shift out. Now, currently, we're actually bullish. So what we're going to do instead, we're going to look for an internal structure to continue towards the downside. Let's go forward with price. So we're pushing back. So now potentially we are looking for that internal break of structure. So now we've made this high. We have just made this push up. So we're expecting a break here to downside of internal structure. So now we've created the internal structure. What I'm looking for is the market to break this low. Notice how quickly the highs, lows, break structure and balances are plotted. That's the structure companion tool. It automatically marks everything across all time frames. Fully customizable, so you can focus on trading with clarity instead of spending hours drawing lines. The 50 founding members pre-order has now sold out. Spots for the official launch will be extremely limited. Join the waitlist now to guarantee your spot before it's gone. Link is in the description. So let's see if we get a break to the downside. And we do. We get a break to downside. So now we've got an internal structure is bearish. We've got a current high, and we can mark this off as a 4-hour current supply. So I'm going to mark off this as my 4-hour supply. So once we have now shifted internally to downside, we haven't yet taken that strong low, but again, we've pushed to downside using an imbalance in the market, understanding that we are likely to want to now take the strong low of the 4-hour as well. So now we've made that break to downside, pulling back, we go to the next time frame. This is where we start aligning our time frames of choice. Again, using the tool here, we're going to see this already plotted, and we're now looking for the market to come back into the 30-minute. So this is my 30-minute area of potential supply. So I'll mark that off as a 30-minute supply. So you can see we've got a nested zone within our 4-hour. So now we've got our previous 30-minute breaker structure. This is our current 30-minute week low, and this is our 4-hour current strong low. So we really want to see price pulling back towards this low. But if I just go into my tool quickly, and I'm going to turn this one on, you're going to see that now we have is our daily strong low. And look where price came into this low before. We had a reaction, we didn't close, and we continued up. That is a perfect target now when we go down to a lower time frame. So now what we're going to do is we're going to look at where we see this push into this 30-minute. We're now aligned with our 30-minute, our 4-hour, and our internal structure on a daily, all aligned. This is when you want to be taking your trades. Now we're going to drop down to that 1-minute time frame. I'm going to show you where we can potentially now capture a trade. Looking back at where we came into this area, price. So forget about all this movement down here where we see current swing structure and internal structure. What we want to concentrate on is when the market shifts out of this area. When we see this shift out here, we create this as a nice high. And again, this will be my area of 1-minute supply. So let's mark this across. This is where I'm going to be looking for a trade, for price to pull back into this area of supply. Now, my target is going to be looking for that daily low that I suggested. Now, before that, we'll look for an area where we take profits on the way down. But let's now place this as a potential entry on this chart. So stop just above the high. Potential target is going to be for this low. So that's over a 12-hour risk to reward. Now, you're understanding the use of multiple timeframes as well as structure alignment. Now, if we go forward and we'll play this forward, in fact, let's speed this up. Let's go to a 5. It's 1 on 1 minute. We're looking for price now to push up. Now, we are currently bullish on that structure. Let's wait. Now we're going back bullish again. And now we're pushing up. We failed to trigger the trade. We haven't quite fully filled this leftover imbalance here. So we still want to see a push higher before we can enter this trade. We pull back, we've held currently this area of demand. We could reverse structure. Let's see what happens. And we did it. We held currently, and we've got an internal break bullish again. Let me zoom in to show you this. So we got an internal structure back bullish. That means we should now go back for this current high. Let's see if we do push for that high. So watch this price move sideways. You're going to see price moving sideways like this, especially when it's coming up to an area of interest like we have here on this previous 1 minute. Remember, this is alignment out of our 30-minute. That's why we're looking for price. Now, you can wait for this to align again to enter, or you can look for this simple set and forget entry here. And we'll continue to push up. What we've just created is nearly some equal highs there. Let's see if we can get another push up to make a better high. So we come all the way back down to this area. We've shifted back bearish. You can see how price is still moving sideways. That's not how you want to be in the trade. Let's go forward. Let's actually speed this up a bit quicker. So we're looking for price to push up. Right, so there we go. We're now pushed into our entry area. So we have these as roughly equal highs, creating liquidity above those highs. Now we could even go deeper into this yet, but I want to see from here a shift back out bearish to show me the market wants to go lower. And we do, we get the shift out. So now we're potentially seeing the entry bring us across. So now we've got everything aligning. We've got our 4-hour internal structure shifting bearish. We're looking to run towards that 4-hour strong low. We've got our daily potentially internal structure is bearish, looking for a run to the internal low. We've got our 30-minute already bearish, which we're now inside this 30-minute swing, and we're looking for the market to now continue down towards this low. Now, first off, let's look at where the market's shifted. We're shifted out bearish here. So we're now looking for the market to continue to show us that bearish move. So we're pulling back up, okay, into this area of potential supply. So we want to see this hold and shift internal structure back lower. This is what the tool is going to show you. And we see a break. Do we get a break? Yes, we do get a break to the downside. So now we want to see that holding, and we get one final push up, take out these highs, sweep liquidity, and then we see a run for the week low. That's going to show us continuation hopefully soon. One more push up again, take out the liquidity. Let's see if we're going to get a push down. Okay, so let's just fast forward this a bit quicker. I want to make this section as quickly as possible for you to see what's going on. So the market needs to break lower yet. We haven't done that. We are now breaking lower. So you can see we've actually eventually broke to downside. So the market now has got the room to drop, and we continue to be bearish. And this is now where we see that reversal out. So we've seen the alignment, we've seen the drop out, come back to the area of supply, and we're starting to be bearish on the 1 minute. Now we can go back to the 30, and then we can read it from this 30-minute entry. This is where we saw the reversal out on the 1 minute, came back here into 1 minute entry, and now we're looking for this to continue down to run, and we do. We basically hit that full target there right at this low. And that's how this companion tool will draw this for you at a click of a button and allow you to see not just multiple time frames, but structural alignment in the charts. So let's now do this again, and we'll go through step by step how you're looking at everything, why we're marking it as we are, and why the tool does it for you like this, and then how and why I took the entry as well. Now you've seen how the companion tool can do this at a click of a button for you when you're looking for your entries. Let's now walk through this so you can understand the theory and exactly how you can actually apply these structures to the charts right now. Let's look at what we've got. We've basically got a previous break of structure right here in the market. Now the reason this is a valid break of structure on this daily is because we're looking for a close down to create a valid high. So we have a break of structure here to the upside. This candle closes down below this candle. So we just mark off the candle. So this candle here closes below this candle's low. That creates this as a valid high, which creates the valid break of structure. So once we see this, we then mark off this as our valid low, where we see the break to the upside. So let's mark this off as a valid low. So we have a daily, and we'll put this as a strong low in the market. And we'll place this to the right. So we have our daily strong low, and when we see this candle again closing below that candle's low, this is going to create our high. So now we have our valid daily week high in the market. Again, this is how you're going to look at marking these structures. So now we've got this as a potential area of demand down here, and we can see a continuation to the upside. But there's an issue. We have an area of imbalance here to the upside and another imbalance here. We've seen this closing through to downside, which suggests to me we'll want to go lower. We've also created a current low here formation, and I'll just mark this off as a dashed line, which is going to be an internal structure. Let's go forward with price, and you'll see how we shift to downside in that internal structure, creating a new internal high here. So we've actually got a break of structure here. I'll make this a new break of structure. Where are we? Internal break of structure. And this is going to be our current high in the market. So we'll have a daily internal strong high. Now, as soon as we see a pullback, we wait for one candle at a time, we get a pullback. When we see a close above, now we're bearish in that internal structure. This close above will create this low in the market, a valid week low. So now we can mark this off as a daily week low in the market. Let's put this to the right. So now we've got everything aligned. In fact, let's mark this off as a internal break structure again. So we have it right. So daily week low. And we want that as a gray. Okay, brilliant. So now you've got that internal. In fact, let me just quickly change that, guys, because it's not actually saying it's an internal. I want you to be able to see exactly what's going on. So now we have that break to the upside on the daily. We have now shifted bearish on the internal structure, and we've also swept this low here, which is going to be our current strong low. Now, until we see a close through this low on a daily, our swing is still going to be bullish in the market. Just because we're seeing this internal bearish does not mean we couldn't go back bullish. So from this point in the market, what we're looking at now is we went through the tool already draw this for us, but we have an area of supply we can now draw out. Now the tool doesn't draw the supply zone as such, but the tool does draw that structure for you, so you can identify exactly where that internal structure sits. So now we're looking for price to pull back into this area. So let's go to our 4-hour time frame. In fact, before we do that, let me just put everything here onto the lower time frame so we can identify exactly what's going on. So now we go down to our 4-hour time frame. We can now look at our 4-hour structure. So we can identify straight away that this low, which is our internal low, is also going to be our 4-hour break of structure there in the market. But if we look first here to the right, we need to double check this is correct, because this is actually our internal break to downside. There's our internal supply. When we identify, let me have a look at this. We've had a break of structure here. We get a pullback, breakout, breakout. Yep, so we now got a pullback, break of structure on the 4-hour. So this, in fact, is showing this is a break of structure on the 4-hour, this level here. So let me actually put a new level there for our 4-hour break of structure. So this isn't a valid, this is more of an internal on the 4-hour. So our 4-hour break of structure is there. So when we see this, we have a valid high here for 4-hour, previous 4-hour high. So this will become basically a new break of structure to the upside. If we see, obviously, the continuation, that's what we're going to have. And we know this ahead of time. Let's just go forward with price. So there we go. We get the break of structure bullish. So now we have a bullish bias on the 4-hour time frame. Now our current low in the market is down here. So this is going to be the same low as our 4-hour low, but we'll leave the 4-hour low and the internal low exactly as it is for now. And we're looking for price to pull back into this area. So let's watch the price goes up. Okay, so we tag into that daily era supply. Now we're looking for is a potential pullback. So the market has made this small quick pullback. We did just break the structure to downside. So we do have an internal structure about to form potentially. Let's see if we get a pullback. We do. We get the pullback. This creates a valid low. And let me just pause this for a second. It's going off. I didn't want to do that. Let me just go back. Okay, to where we want it. So this is where we create our 4-hour internal structure. Let me mark that off as a 4-hour internal break of structure potentially. So the market now, we're looking for the drop to downside. Let's see if we get that. And we do. We get the break to downside, which is great. As soon as we see this break to downside, we've got a new high up here. So this is our high for our 4-hour. So this is, remember, our current internal structure on a 4 hours. We'll mark this out as a 4-hour internal strong high. Get that out right, guys. And let me just push that over to the right. And let's just change the color. So we've got all similar colors here. So we've got internal strong high here. And then we've got a weak low. So let me just use this level again. We'll mark it out. So you can see we now got a 4-hour potential weak low as well. So let's just adjust this. So we've got the internal weak low in the market. So now we've got our current internal break structure, and we'll make a BOS for this as well. Change that. And we'll make that italic so we can see the difference. So we've got a nice break of structure. We're now bearish. Okay, we've come out of our daily, so we're starting to align. We're bullish here, but internal structure is bearish. So now we've got a bearish internal structure. We can mark out our current area of supply on the 4-hour. Now, this is a great area to understand where we're now aligning. Even though this is internal structure, look what we've got. We've got an internal structure here. Let me draw this out. Internal structure break to downside, pull back on the daily, looking for continuation to run this internal low. We then got the internal structure shifting out on the 4-hour, looking for continuation to the 4-hour week low of the internal structure. Once you start to line all this, that is how everything's going to work. And remember, the tool did this for us in seconds. So you haven't got to try and work all this out and mark it out yourself. But the idea is that now you start to understand why this works and why the tool is going to make life so much easier. So now we have this, we can now go to a 30-minute time frame. Inside the 30-minute time frame, we look for the last era. Well, this is our last era. We see a break of structure to downside. So I don't believe this is the correct break now. Let me just mark this out first. Because we have a break here to downside pullback, that's in fact the valid low. So this is your valid low for break of structure. Now, from the break of structure, we're looking for the last time we close up to create a valid high, and that is in fact this candle right there. So now what I can do is mark this out as a valid high in the market. So we're going to mark this out as a, let me just go back to here. We'll have this as a 30-minute strong high in the market. Make that over to the right. And now we can mark out is our area of supply. So we can mark off area of supply in the market. I'm just looking for where my last area can be. It's right there. Mark this out. And don't worry if you're not sure how I'm doing my supply and demands, because all of this is taught inside the 90-day fix program. So when we see the market holding at this level, that is currently our, see if I can zoom out and show you, is that strong low on the daily. And you can see how we react to that low. Now we pull back in to, put that back, into our area on the 4-hour internal structure of supply, and then into our area of swing supply here on the 30-minute. Now this is crucial to understand. We're now aligning across those time frames, aligning our market structure. That's what this is all about. Now we also take some liquidity as we push up here above this high. We take some liquidity here on the 30-minute. So let me just add this in. And we also take some liquidity at this high here. Now this high is going to be a better area for liquidity, because if I look at what we've got this area of a very small gap left over there of imbalance. So when we see this high being run, that is exactly when you're going to drop down to 1 minute time frame. So now what we need to do is drop down to that 1 minute, and then you'll see step by step here why this works. So we run that liquidity into the 30-minute area. We are aligned across all time frames. We're going to zoom in here, and we're going to look for when the market shifts out. Now, unlike the higher time frames, when we get to our entry time frame, there's a way we want to look at price. And really what we see here is a simple reversal in the market. So we have a break of structure here to the upside. Now I'm going to just mark this off as a, let's go back, let's mark this off as a solid line. And then we see a new break here to downside. That's a shift in structure. So I'm now going to mark off an area from this high, because when we see the breakdown to this area here, we have a small leftover imbalance. This is a breakout. This is the last time we see a close up. So we don't mark it from that high, we mark it from this high. This becomes my area I want to see the market pulling back into for my entry. Now this is using a reversal out of this area. Now there's a reason why this entry is going to work, because it's taking the liquidity on a higher time frame. We can look for this instant reversal. Now all the entry models are clear inside the 90-day fix program as well. So this is where we're looking for that entry now out of this area of supply. So we can mark off is a sell position right at this level, stop above the high of the zone, and then we're going to target all the way down for that daily low. Now before this, where we see the pullback, I'm going to mark it off from this low here in the market. What this is going to be is a fabulous area to look for a first target. The reason you're going to do this is to take some risk off the trade. So let's just play this for, actually let me speed this up. Let's go full on 10 so we can see the way this works. So we're looking for that market now to pull back in. You're already seeing what happens, but I want to show you now, this is how you can do it manually. We've gone through everything step by step. Now we just created there some liquidity. And let me show you. Those roughly equal highs from this high to this high here is when we're going to create that liquidity in the market. And I'll put above there some liquidity. So we created some liquidity to push above this roughly equal highs into area of supply to sell. This will be the first target. So I just bring this back up so you can see. This will be your first target, takes them off the trade. So it's just over a 3-hour trade to hold on for this low, which is just over a 12-hour trade. And we speed this up and we go and see if we can just see where this triggers in so you can see how this works. Again, we've been entered into that trade. Perfect. The trade has worked exactly as expected. Now we're looking for this low to be hit to take risk off the trade. Then once we get that first target hit, we're looking to target the daily. And I'll go why the daily low in a moment. But this is the way you need to start aligning those structures. Once you mark your structure and align it like this, your entry is going to go much better for you. So again, we're just looking for this to be run. Let's see if we can run this low. Okay, so it looks like we may have just run that low. So pull that across. There's your first target hit. So you're risk-free on this trade. You've taken a 3R out of the trade, and now you're looking for this low to be hit next. So let's go through the time frames here. Let's go to daily. Now we know this is a daily strong low in the market. We have a strong low. We also have an internal weak low as well. Now potentially that's where we're expecting price to run to after coming from this internal supply. So take out that weak low. But before that, we've got to run through this strong low first. And this is where many people are setting their targets perhaps potentially in the wrong place. When we go to a 4-hour time frame, what do we have? Well, we have our current weak low in the market of an internal structure. And again, this low here is going to be, as well as the daily internal weak low, it's also our strong low on the 4-hour. But to get to this weak low, we've got to run through that daily strong low first again. And we can see what happened last time where we held at that strong low. So again, is that the best choice for your target? Let's go to the 30-minute time frame. On our 30-minute time frame, okay, we haven't marked it out. Let's mark it out so we know. This is going to be the low in the market where we see the pullback. So this is now going to be our, let's mark it off as a 30-minute break of structure. We'll go in, we'll just change this to a 30-minute, okay, weak low in the market. And once again, if we're going to target for this weak low, we've got to go through the daily strong low again. See, let's go back, the strong low here on the daily. Now, obviously, all of these levels will already be plotted for you with the companion tool, and that's why it's so powerful if you do struggle with your structures. The idea is we're looking to take profit at the ideal location, and that's why the strong low becomes the ideal location. Now, if we fast forward this trade, we can see that we go down and we look at where price touches to the pip before we see a reaction back up. Is that strong low? Now, potentially we know what happens here. The market does continue down eventually to the full target, but why would you want to sit through that pain and then potentially get out up here somewhere for less profits? Let me just go through it. Look, we hit this target down here. Let's see how price moves. So eventually we do push through and we break through this low. But again, do we even go for this week low here on the 30 minute? No, we don't. Have we gone for this week low on the daily yet and the 4-hour low here? Okay, let's shrink this out. This is our low down here on the 4-hour as well. Have we come back to that yet? No. So again, you may still be looking to run for this week low on a 30, and you may be seeing price turning, potentially going higher. And even though what I'm seeing here is a sweep here in the market and we could run lower now, if you don't understand the way the market moves, this is where you're going to have potential more, not losses, but giving back your profit in the market, which to me is worse than having a losing trade. Let's run this through and you'll see what happens. So we do eventually run down and we take this low. And like I said, the reason for this is we saw liquidity being taken. So right here in the market, we took that liquidity. So mark it off and you'll see. So we took the liquidity in this area and basically ran into this wick here, which is a previous area. We saw wick into this imbalance, push down, come back into it, went high, take liquidity above this high, and then that allowed us to run for this week low. In theory here, you can see the trade will work out for this low eventually. But the point is, why put yourself through that stress when you can be out of the trade and instantly when we hit this daily low, and then we can walk away with profit. And then you can wait, you can look to get in the market here again. Now, when we see this sweep, we'll drop down to 1 minute. So now we're on the 1 minute time frame. This is where we see that sweep happen on the 30 minute. So let's now reprice how you could have caught an entry. Now, if you've got to this point in the video, well done to you. And thank you for watching to this point. I want you to put a comment now down below that nobody else is going to understand why you're putting this comment in there. And that is how to read 1 minute entry after liquidity sweep. So we're going to read structure in this point. So let me just mark it out for you. So we have this as a new breaker structure to the upside. From that point, we have a pullback, a new breaker structure. Now, as we see this, we have a new low here formation and we get a new break to downside. From that point in the market, this actually becomes a area of supply where the market's going to come back into. And then this becomes your current strong high in the market. Now, what actually happens there, I'll mark it off as a dashed line, is that we create is a sweep in the market. So let me just add this as a liquidity sweep for you. So we actually sweep through that high and then we fall down. Now I'll show you how you can actually capture an entry here. Since we see this break, and let me just grab one of these lines, we pull back, we have a new breaker structure. And again, we have another pullback here and new breaker structure. So if you continue to read this structure on this time frame, we're bearish at this point. And then we went back bullish here. Let me just use one of these lines. Yeah, put that back. All right, so just duplicating that line. Then we push up again. And once more, let's grab another line. And you can see that this is the last time we see that break. And then we take out this high of liquidity. Now remove that area of supply. And the reason this happened is this area here, we get closed through. I'm not going to talk about too much of that. That's all inside the 90-day fix program, what it's about, but that's what told me we were going to run this high for liquidity. So at this point, when I'm reading the market, what I'm actually seeing is that we're going to run this high for an entry into something over here, potentially on perhaps a 30-second chart. When we run this and we're still bullish, you can now wait for this low to be reversed. So let's just grab another line. So when we see this being reversed, we have an opportunity to look for potential entry. Now we have here is our last buy to sell move, and we can actually mark this off as a full zone. There's ways we can look at current zones. We have a full zone there, and we have a little pivot zone up here. Now, often we don't see price pulling back to these pivot zones, but here we do pull back into this area. And that is where you can look to enter this market. After we made that sweep, after we made the sweep on a 30-minute, it gives me more confidence the market will hold at this point, and we can look to target for that week low again that we didn't go for on the first trade because we exit over here to the left, and you can now hold this to target for that week low. And again, it's over a 6-hour trade. Before we wrap up, if you're still second guessing trades or staring at the chart, not knowing what the next swing means, that's exactly why I built the 90-day program. It takes structure and makes it step by step so you know exactly what to do instead of guessing. Traders like Danny came in after losing nearly $300,000. He didn't just learn structure, he finally knew how to trust it and rebuild his trading. If that sounds like where you want to be, the link to apply is in the description. Seats are limited, so check if one's open for you. That's just reading your price. When you see that sweep, and let's just change this to here so you can see exactly where this is. We go to 30-minute chart. When we see this liquidity sweep formation here, after we've taken full profit target, we broke through. Now we see the break and close through. We expect price to go for this low. We never broke through here, we just wicked through. This breakthrough tells me we have to go for this low next. Well, at least take these lows here, which we did this low, we failed to take this low. That's the next low to take for liquidity, then the external low. When the market came back up and we just see this big sweep, that is when we can go down to that lower time frame right there, where we look for our entry. And we can see the shift out, but the market came back and eventually took out this high. We did go into the era of supply, and the market closed through an area there where it told me we would take the high for liquidity, and we took that liquidity. And most of the markets are going to be manipulations taking liquidity. Then we have another shift out. After we see that second era being taken for liquidity, this is a much higher probability to take a trade off that zone. There's also other ways we can look at why this is going to work. We can go up a time frame like a 3-minute as well and see on a 3-minute what's happening. Now on a 3-minute chart, we can see that we have a break of structure here to downside. This is pulling back to take the high here. Again, a nice liquidity run, taking this high, and then we continue down. So that's using multiple time frames. That's using structure alignment to take your trades. Now, this is just a small trade you can look at taking. The overall trade is this one. This is where your big profit's going to come in once you understand to align your structure. Your market structure being aligned with multiple time frames is the way forward. Now, you can learn all this in much more depth inside the 90-day fixed program. If you want to learn more how this structure is applied, do check out this video, what's now coming up.